Good evening and welcome back to Be Rich. My nephew and good friend Ashwat Swaminathan is with us and we are going to discuss Uncle Warren here again. Uncle Warren pulled off another classic Warren deal. He did it with Bank of America, Goldman Sachs and General Electric in 2008. When going gets tough, people need money. They come to Uncle Warren who has pots of cash and he gives it to them at extraordinary terms. His choice of weapon is a preferential share capital. A preference capital is one in which it has a hybrid version, in which it has features of both the bond and as well as stocks. There's an assured interest payment or dividend payment every year, and it has to be redeemed by paying cash. And normally, there are conditions and strings attached to that. And when it is repaid, he also gets rights to buy common stock at a predetermined price.
But that's part of the deal itself, not
That's
preferred stock.
Yeah, when he giving the money,
Yeah.
he says by giving you this preferred stock, you give me the right to buy a stock, buy the
Yes.
share at a fixed price. About a year back or sometime before that, when the oil sector was down and out and reeling, he decided to swoop in on a petroleum company called Occidental Petroleum
At $10 a pop.
at $10 a
Pop.
$10, and he also issued them a lot of preferential capital at a very high dividend rate. The Occidental Petroleum Company used the money to buy another company, and it paid off. And so, with the details is Shashwat Swaminathan, and we will analyze the deal. Go ahead, Shashwat.
So I have a small clarification. I'm not sure whether because Occidental borrowed around $47 billion in 2019 before Buffett got into the company to buy Anadarko Petroleum.
Yes.
So
And after that, they were struggling with money.
yes.
They needed more capital, and that's where he entered with the preferential share capital.
Yes.
Yeah.
So what's interesting about Occidental Petroleum is because we had a conversation about Reliance where you, me, Anish were talking. You were telling me about how petroleum works, and Anish talked about how you have to hedge. You have to hedge your oil positions in the futures market. So first, could you explain what is hedging in oil?
See, that is, suppose you are going to, and refiner is the one who buys oil, and then he refines it and sells the downstream
So
product.
you're Mukesh Ambani.
You are Mukesh Ambani. What happens is the price of oil moves up and down. It's like gold moving up and down.
Volatility.
But the refiner's main commodity is oil.
Oil.
So he hedges against. Suppose I'm buying in the open market, and by the time I refine and sell, the price of oil collapses.
Yes.
I lose money. So when I buy, I sell. So I am neutral. It doesn't matter to me. Similarly,
So you sell where you incorporate the cost of refining into that price.
yes, like all its working capital is oil.
Right.
So that oil price shock
Yeah.
should not affect the margins of the company. So they will hedge it,
So that's how they act as a company and not a trading company.
not as a trading company. But this company, what they did in this time, normally they would hedge.
They were unhedged.
They left it unhedged.
Yeah.
And when they left it unhedged, a confluence of events. One, the post-COVID pandemic that was expected.
Yeah.
The unexpected bonus was the Ukraine war, which gave them bumper profits.
Right.
So this bumper profits helped them to cut debt by
Yes.
50%.
They had debt at 2019 at $47 billion.
Today they have $23 billion.
21.7.
So they have cut debt by 50%. There's another company which we have invested in India, which has done the same. That's Tata Steel.
Tata Steel.
This is exactly what Tata
And so does Tata Steel hedge.
No, Tata Steel has its own source of iron ore
Okay.
for several hundred years.
Yeah.
So Tata Steel, that is the unique advantage of Tata Steel.
They control the entire value chain.
They control the entire value chain.
So they have no problem of how much. So it's only if Tata Steel decides to export steel as a commodity.
Until then there is a problem.
But they are not. They process and they sell it as a
They sell
finished
it
product.
locally.
Yeah.
When the prices support, they sell abroad.
Right.
Now, this company, what they did is, the other company they acquired was having crude oil. And they allowed the price. They didn't think that the crude oil will drop. They took a right call that the crude oil will increase.
Yes.
So that spewed cash for them. Part of the cash was used to pay off the debt.
Yes.
And part of the cash was used to return money to the shareholders.
Yeah.
But Buffett had put a condition
Yes.
that before repaying his preferential share capital, they should have paid the other shareholders $4 per share.
Yes.
And what Buffett went and did, he's already got 18 or 17% of the company,
18%.
which of common equity he bought in the market, apart from this preferential capital.
Yes.
So he is bought it at $10. He is getting paid interest or dividend on the preferential share capital.
As well as your equity.
On equity, he is getting $4 per share,
Yes.
which is what he put as a precondition
Yeah.
to ensure that he didn't think $4 will come quickly.
He said by 2029.
Yeah, so he thought $4 will come at 2029, but $4, the way they are going, $4 will reach in a couple of years.
The guy at Occidental said by next year we might reach it.
Next couple of years. So if they pay off $4, that means they can buy back Buffett's
Yeah.
position of preferential share capital, which is giving him 10% return.
Yes.
But at that time, Buffett has the right to buy certain level of stocks.
50 million. 80 million.
80 million of stocks at 59 apiece.
59.62.
Yeah, the price has just crossed it. Now it's 60.
It settled back down. Prices now 59.01 as
Okay.
of what? But it went up to 62.
It went up to 62. So this means Buffett can go to 20%. This will take Buffett way past 20% if he acquires this.
And one more thing is that if Buffett does decide to cash this in, him buying 80 million itself will push the stock up.
Exactly.
Yeah.
So he has already, that means he would control more than 20% of the company.
Yes.
And he can use the money he gets from preferential capital.
It's supposed to take him up to 22-23%.
Yeah.
Yeah.
If he buys that.
Yes.
And for that he will get the money of the preferential share capital he has given them.
Yeah.
So it's a win-win deal.
Yeah.
If he had done it till 29, he would have collected interest till 29.
Yes.
Now he is getting $4 for the shares. Plus he gets the right to own the company.
Yeah.
So when crude was very bad for most people, and people were talking of climate change, and when crude was in serious trouble, is when he put his money. And the crude dropped to $25 a barrel.
Yeah.
At that time he put his money.
So this was when Elon was saying that crude is going outside the picture and
Yes.
electricity is the new
Yes. Yes.
thing. Right.
And he's made a quick killing on it.
Very quick, which was actually unexpected.
Yeah, but that's a bonus.
Or maybe expected.
No, the Ukraine-Russian war has
Yeah,
made
not
it.
the Ukraine-Russian, but I'm talking about the post-COVID.
That was a recovery, and that a bet he made.
Yeah. So in quarter two, this thing went up to $3.8 billion. And their free cash flow for the last year was $4.2 billion before working capital. And their quarter-to-quarter increase has been 16%. And also, Buffett is getting $800 million in dividends.
Yeah, that's interest.
Yes. And
I call it interest or dividend.
yeah.
Plus the cash he is getting on, the dividend he is getting on his common stock.
Right. And so, yeah, and as you said, he has the 20% threshold. The 20% threshold, there's a concept called dividends received reduction rule. So if you could explain that.
See, there is a rule for if you cross 20% threshold,
Yeah.
the amount of tax deduction you can take against your dividend rule gets up.
Yeah.
So if I own more than 20% of company, the dividend I get
Yeah.
can be taxed at a different rate.
Right.
If I had less than 20%, I pay a higher rate of tax. That's the dividend rule.
So a minor partner pays a greater amount of greater amount of tax on his dividend than someone who owns the business at a threshold of above 20%.
That means you are controlling it. It is perceived that you are controlling interest in the business.
Right. There's another interesting point which is more wind in Buffett's sail, which is
Yeah, tell me.
there's another interesting concept which is more wind in Buffett's sail, which is the Inflation Reduction Act, which they're proposing in Congress to pass, which basically guarantees a subsidy for oil manufacturing companies,
Yes.
which Occidental happens to own a great share of the market share.
Oil manufacturing is basically refining.
Right.
So they have a
leading role in that.
leading role, and there is a beneficiary of this.
Yeah.
So on this, he is a winner on 3 accounts. He gets dividend or interest on preferential stock.
Yeah.
He gets whatever dividend you are paying on common stock, and he is also going to benefit. The company will benefit from the subsidy that Joe Biden is giving him. There might be still some value left in Occidental Petroleum,
Yes.
but not the level at which he entered at $10.
Interestingly enough, I wanted to come to that. The PE ratio of Occidental is 5.8, and the dividend yield is actually lower than its competition at 0.88%.
Yeah. So the prices are the 5.8 is nothing.
Yeah.
So if oil continues to remain 70, 80, as it is expected because the Russian-Ukraine war is continuing,
Yes.
and if the war goes further bad,
Yeah.
then the world may have a ban on Russian crude. If there's a ban on Russian crude, then crude will go back to 120.
And Occidental will benefit.
Yes, and it will give Occidental time to cut its debt further.
But my question is this: if price does go up, right, and it stabilizes at a point of 110 or whatever price you're saying, isn't it difficult for a company like Occidental, which is just refining, to continue selling at a great? There's no windfall, right, after the market adjusts to the price.
No, but then he has that
Crude oil manufacturing.
the crude oil digging company.
Yeah.
So, which is basically digging for crude.
So the benefit he gets is because he acquired the digging company.
Yes.
So because he captured the value chain, he's
Yes.
now benefiting from the windfall.
He is doing what the Tatas have done in steel.
Yeah.
And Ambani is also doing to an extent. He owns some oil field, he owns the entire refining,
Yeah.
and he owns the entire value chain.
Do you think when they acquired these companies, they had any idea, any clue that they would be this big or they would be so much of a windfall?
I think there was too much leverage.
Right.
And I thought they guessed that the market bottomed out at 25.
Okay.
That's what, see, the trouble could have been if crude sustained below 25 for a long period of time.
Yeah. And finally,
The bet was crude will not settle down below 25.
right. And finally, I have a closing question on Warren Buffett's style of picking investments. Although he's known to be a defensive player who picks stocks with good dividend
But this
yield,
is a very
offensive.
defensive. No, this is a defensive move
Okay.
in the sense that it's the advantage of having cash
Right.
when nobody has cash.
Then you can do out of favor
Yeah.
investments.
Basically, nobody wanted to take a bet on Occidental because
Yeah.
Occidental already had $47 billion debt.
Right.
So when nobody wanted to lend, he became the lender of the last resort. See, it's a question of Buffett it's not a question of, his playbook is very clear. When a company is rolling in debt and nobody wants to give it money, he provides the emergency capital to tide over the immediate difficulty. And the terms are normally usurious. 10% in America is usurious money. He collects that money and he also gets special deals like ability to buy. And I know of 3 cases which I have tracked. Once he did it with Goldman Sachs, he did it with General Electric, and he did it with Bank of America. And in Goldman Sachs, what he did is, when he finished the transaction, he said, I exercise my right, but I don't want the stock. Consider it as bought and sold.
Yeah.
Give me the balance. I don't think he could exercise it so profitably in GE, but he collected his money. In Bank of America, he still has a holding, I think. So this is he has $150 billion.
Yeah.
The market thinks that Buffett has put $50 billion. A substantial portion of that $50 billion has gone to buy Activation Desert, which is a special situation thing,
Right.
which he is going to sell to Microsoft and make a $10 markup on that. So Buffett is a old man waiting with pots of cash to get into deals like this. And this is possible if you have enormous liquidity and no leverage.
Right.
So the idea is you have liquidity which comes from float and you don't have any interest payment on that, and it cannot be called at short notice.
Yeah.
That's his advantage.
That's all I have for you.
Thank you for watching Be Rich. If you like this content, kindly consider subscribing to our channel and turning on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.